Okay, let's then turn the page and look at our couple pages, in fact, to page number 1.8 and 1.9. 1.8 is called the purchase journal. Now, up at the top where it says purchase journal, I want you to write purchases on credit. Purchases on credit. That's the purpose of the purchase journal, is to record purchases on credit. If it was with a check, then we wouldn't have it go in the purchase journal. If you just went down to Walmart and bought some stuff, you wouldn't record it in the purchase journal at all. You'd record it in the journal where we record checks. Okay? So this, and if your company buys everything using a check, you don't need a purchase journal at all. Okay? But companies, as they grow, develop more and more accounts with their suppliers and will usually have purchases on credit. Now, purchase orders are shown down at the bottom of this journal, and we have 6 purchase orders shown down there. Purchase order is used to order stuff from vendors, usually suppliers or vendors. Now, it documents what you're ordering, okay? But one thing a purchase order does that sometimes is required by the vendors is it authorizes them to send the goods. Sometimes vendors have been burned enough times by sending stuff that the company really didn't want, or later said, I don't know why you sent me that they now require a purchase order to authorize them to do that. Okay, so purchase orders have that purpose. Now here we have 6 purchase orders listing those items that Artistic Furniture has purchased on credit. Now, when they first made the phone call and said, and Peter, the purchaser agent was Jay Enders. When Jim would make the phone call to Adams and Company and say, send me 24 lamps, Jim would write that down on this purchase order to document that he'd ordered it. He would also document what terms Adams and Company agreed to. And they said, in this case, in the upper right-hand corner of the purchase order, you can see that, it says 90 days, right? Okay? And he would document what price they agreed to, because might he negotiate a better price since he's buying 24 lamps as opposed to 5 or 6. So he negotiated a price at $10, and the value of that is the supplier might have said $10 over the phone, but could the invoice be different than that? So it makes sure that Jim Andrews is telling whoever's going to pay this bill, this is how much we agreed to. Don't pay a penny more. Okay? So it gives a lot of great information. Now, Jim made that phone call today. We received the 24 lamps later. When do we record that purchase order? What's that? When you get the goods, not when you write the purchase order. Okay? The purchase order only gets recorded into the accounting when you get the goods. Okay, now there are some accounting software out there where you actually record the purchase order when you make the order. But if you were to see what it's doing in the background, it's not making any accounting entry into the books. Okay? It's just recording a purchase order was written. Once you, what's that?
It says non-posted.
Yeah. Once you receive the goods, if you identify what you received in there, that's when it will make the entry. Okay? Now, with that in mind, you'll notice down at the bottom left-hand corner of this, each purchase order, it says received by, and then Peter Lund. Peter Lund was the person who received the goods. So he just initialed or signed it saying, hey, it's here, we've got them all, so now we can set it up in the journal. So we're going to make the entry to set up that purchase order, and that's going to have 2 parts to it. Okay? This journal has the credits on the left and the debits on the right. How'd the general ledger have it all? What's that? Debits on the left, credits on the right. 2 journals, because of just the logic. Remember, oftentimes these are prepared by people that don't understand debits and credits. And the logic is, let's set up the total amount of the payable first and then figure out what it was for, which means the credits on the left, debits on the right. You might want to write that on the journal. Enter in, just note that the credits are on the left of this journal and the debits are on the right. Two journals, a purchase journal and cash disbursements journal, are like this. And let's go ahead now and enter this purchase order into our journal. The first thing we're going to list is on the left side, we're going to put the date. What's the date of this purchase journal, or this purchase order? August 11th. Okay? It's not August 8th, because August 8th was when it was written. What happened on August 11th? When it was received. And so that's the date we're going to put in here, August 11th. Now it says 90 days.
November 9th.
Yeah, so it's about, no. Well, let's go ahead and just say 3 months. So November, which is 3 months later, November 11th. Okay? Taylor, you're right, probably, but let's go ahead and go November 11th. Okay? Now we bought 2 dozen lamps. Let's go to the purchase order number column in the middle. There we write the purchase order number of 201. And the payable to is Adams and Company. Okay? In that middle column. Everybody with me so far? Okay. Now, where are we entering this into the T accounts yesterday? We've got a $250, we bought $250 worth, or $240 worth of inventory. What is the debit and the credit? Last week we did this hundreds of times, it seemed, didn't it? So what did we debit and what did credit? Say that again, Dixie. Good. Okay. Now in this journal, the credits are on the left, so the credit will go to payables, right? And so in the column that says accounts payable, put $240. And then on the right-hand side, the next page over, are the debits. Okay? And there we're going to find furniture inventory, and we're going to write $240 in that column. Okay? So if we were to look at it this way, I'm having trouble getting it all in. That's what it would look like. Credit to accounts payable on the left, debit inventory on the right. Pretty simple stuff, isn't it, when you're entering in? Let's do one more together. Let's go down to number 202, which is right down below it, and do that one as well. We have, from James Distributors, we've made a purchase order number 202. What was the date of that purchase order? 8/12. We received it on 8/12. And we have terms called 2%, 10, and 30. Okay? Anyone know what that means? So that means that if we're going to pay it off, the date was August 12th, so we've got to pay it off by when? August 22nd. And if that be the case, we can knock off 2% of the invoice. Now, is that good? Now, 2% is really not a whole lot of money, is it? But it adds up, one. And secondly, 2% in 10 days equates to quite a substantial annual rate of interest. You know, if you apply, because if you don't pay it in 10 days, you still have to pay it in 30, right? You don't get away with not paying it at all. And so, yeah, it has substantial. It actually works out to be about 36% rate of interest. I mean, it's fairly high. Okay. So that means we're going to pay for it, but we want to put on the due date August 22nd to remind ourselves that's when it's owed. Okay? Now we owe $7,000. We're not going to record the discount yet. We only record the discount when we actually pay for it. So according to our payable purchase journal right now, we owe $7,000. So that's going to be a credit to accounts payable, $7,000. On purchase order number 202 to James Distributors. Okay? And what's the debit going to be on the right-hand side? $7,000 where? Carpet inventory, yeah. Okay? Everybody with me? Go ahead and do the remaining 4 entries.
Using the information from the purchase orders on page 1.8, make the entries into the purchase journal. If you need help, the answers are in the appendix on pages 8.4 and 8.5.